2022. So what should we expect? Early in this madness, we looked at the trajectory of the economy and we said it's going to be like a zigzag economy. The economy will be dancing to the tune of the virus. And that's exactly what we are seeing. We can discuss the numbers, but the trajectory in many ways is predictable. Basically, the winter is bad. The summer is much better. We have seen it in 2020, 2021, and we will see it in 2022. Now we are unfortunately in the winter. It's going to be a long winter, and we see some seasonality when it comes to the virus. So we know that the first quarter of the year will be actually negative. The spring will be better. The summer will be on fire as people start spending this mountain of cash that they are sitting on. So it's very predictable. We know that it's going to be very complicated. And we know that in the case of Canada, it's going to be more complicated than, let's say, in the US and even Europe, because we reach capacity in our healthcare system much faster than most other OECD countries. And therefore, we have to introduce restrictions much faster. And that's why Canada has been lagging the US economically. We will see the same in 2022, but it will be mostly in the first half of the year. In the second half, especially the summer, we are going to see actually very strong growth. Overall, you sum it up, and we are talking about GDP growth in 2022 of about 4.5%, starting from a very low base in the first quarter as we go through the winter. In the background, we have inflation, and we have to watch this inflation. And let me tell you one thing, nobody knows where inflation will be 6 months from now. And when I say nobody, I include the Bank of Canada and the Fed in that. Everybody's pretending, but nobody knows. So clearly there is a risk here. And the source of this inflation is coming from wages. The labor market is very tight. Vacancy rates are extremely high. We cannot find people. We have supply chains that we are all aware of. And we have this kind of spending that will be coming in the second half of the year. When it comes to supply chain, it's very important to understand that it's mostly a demand-led shock. Listen to this. In the US, this huge increase in spending on goods, and it's easy to spend on goods. You press a button and you get your exercise bike. It's very easy. This extra spending is equivalent to basically overnight parachuting 75 million people, extra people, into the US, and the minute they land, they start spending. This is a demand shock, and even a normally functioning supply system will have difficulties facing this demand shock, and this is not a normally functioning supply system. So I think it's reasonable to assume that it will take a while. The Bank of Canada, the Fed underestimated how long it will take. Now it's clear that this supply chain issue will be with us until late 2022, so inflation will be there. Wages are rising, and that's something that will lead to higher interest rates. Now, the market is pricing in no less than 6 or maybe 5 moves by the Bank of Canada, namely 125 basis points in 2022. That's a significant increase. That's what the market is expecting. I believe that the market is wrong on that, because I think that the Bank of Canada is aware that the number one enemy of the economy is overshooting. You don't want to raise interest rates too quickly. Every economic recession over the past 50 years was helped, if not caused, by a monetary policy error in which central bankers raise interest rates too much. Therefore, we believe that the Bank of Canada will be more muted. They will move only by 3 times, namely 75 basis points in 2022. They will continue to go in 2023. Overall, we see the bank rate rising from 25 basis points to maybe 2% by the end of 2024, but a very gradual trajectory as opposed to a very quick trajectory, what the market is expecting now. This, of course, has major implications for the stock market and asset allocations. Clearly, the bond market is not your friend at this point. I believe that rates will be rising, reflecting inflation expectations and reflecting the rebound in the economy in the second half of the year. Therefore, in the stock market, clearly you have to be very choosy. And I will focus on growth-oriented stocks. I will focus on stocks that actually going to pay back investors, dividend-paying stocks like utilities. They will benefit from this environment. Banks will benefit Also from higher rates, spreads will improve. That's another positive. And we believe that all this is under one big assumption, that Omicron is basically a transition from a pandemic to an endemic. And by spring, summer of 2022, although COVID will not disappear, we will learn to live with the virus, basically coexist with it as an endemic as opposed to pandemic. And this, of course, has implications for the market.